Okay, Prof.
Okay, good evening. Good evening to all. My name is Chu Teck Min. I'm the Academic Director of the Master of Science in Accountancy program here at Nanyang Business School at NTU. So welcome to our webinar, Nanyang Perspective, Accounting in the Age of Disruption. Right? The disruption that accounting faces is not only from new technology and automation, but now also from the COVID-19 pandemic. Right? Accounting today is no longer what it was in the past. With improved technology, corporations and accounting firms alike are embracing new ways of doing business, and especially so in light of the COVID-19 pandemic. Now, amidst the technological and other disruptions, professional knowledge in accounting continues to be highly valued in the world of business. In tonight's webinar, we want to discuss the following things, right? The impact of technological disruption on accounting, how data analytics is changing the accounting and auditing landscape, and finally, how financial accounting or reporting is responding to the challenge posed by the COVID-19 pandemic. We have three panelists for this evening, including myself. So let's get started with our first panelist, who is Prof. Goh Kim Huat. Kim Huat is from the Information Technology and Operations Management Division of Nanyang Business School. He's also the Academic Director of our MBA program. In our MSc Accountancy program, he teaches the course on Data Analytics and Machine Learning for Accounting. For this webinar, Kim Huat will present us some perspectives on accounting and analytics. So over to you, Kim Huat.
Hi, thank you, Timing. Hi, everyone. My name is Kim Huat, right? So I'm the faculty at Stigmas. Introduced earlier, I'm a faculty within the business school. I would say I'm 70% analytics, 30% accounting, right? So later you'll see Timing again as well as Kia Hong, two of my colleagues, esteemed colleagues. They are probably more accounting than analytics. So for me, I'm more of an analytics person than accounting person. As he has described earlier, I'm from the division of IT and operations management, mainly doing work in area of analytics. So what I'm going to talk about today, right, essentially is how data has sort of changed, right, in the last decade, right? I think we are at a very critical juncture at this point in time in history, right? Very shortly, you'll see a couple of slides on that. And I think that change in data has immense impact on many different fields in accounting alike, right? So I will talk about that. And of course, we also will then discuss what are some essential roadblocks and challenges that the accounting field is also experiencing. I think these are important things that will impact individuals that are potentially getting a career in accounting, as well as looking forward what's going to happen in the next 10, 15 years. All right. So two things. I have only 15 minutes. I will keep to the time. First, how has data changed in the last decade, and what are some of the roadblocks? And this is from the perspective of accounting. So if you ask me, how has data changed in the last decade, right? You will see only pictures in this couple of slides I have for you all today, right? You folks, depending on where you are, if you're in Asia, it's probably at dinner time, right? So I keep things a little bit light here, all right? I will use a very simple analogy here to sort of describe what has changed and why, all right? So first things first, if you look at Western art, right? Western art essentially gone through generations of evolution, right? In the 14 to 1600, you got the Renaissance period, whereby you have paintings like Mona Lisa and whatnot, you know. So Leonardo da Vinci is a great master during the period of Renaissance period. And around 1865, right, you have the post-impressionism, right? Van Gogh and the rest of famous painters were sort of very popular in this time period. If you were to pause and think at this point in time and ask yourself, what is the difference between these two time periods? 1400s to 1600s and 1850 to 1900s. Number one, first question, ask yourself, what's the difference? The second, why do you see this difference? So when I use this slide, right, in the classes that I teach, right, when I ask the students what are, of course, this is a webinar, I could not have you folks provide me with your response, right? Typically in a regular class, when I ask individuals this question, the typical answers I would get is, you know, in post-impressionism, probably because of this particular painting, you can see movement and whatnot, you see emotions and whatnot. In this, you know, you don't see that. A second very, very common answer that I always get is also in the Renaissance period, the painting are very lifelike. There's high fidelity, right? It looks like human-like, right? Mona Lisa looks like a lady, right? In this case, less so, all right, in the post-impressionism. So that's what has changed. But typically, but more specifically, why do you think you see this change? So typically when I ask this question, why do you think you see this change? Of course, I got a variety of answers and whatnot, changes in the expression of art. But one answer which I'm looking for, right, in this series of questioning is around 1600, something happened. What happened around in 1600? That was the invention of cameras. So with the invention of cameras, what happens is that in art, there is no great imperative need to sort of capture lifelike moments, right? You have cameras can do that, and therefore art change. So the analogy I want to use this for art to analytics is the following. If you look at analytics today, we are at a very interesting crossroads in the last 10 years. And this is a point where you are seeing a massive shift. You hear things like big data and whatnot and so on and so forth. These are all buzzwords. These are words that you hear and sometimes you get just sick of it, just hear too much of it, and you get nauseated by these terms. But more importantly, there is a philosophical difference, a slight change, a major change here. And the change is as follows. Some of you might have taken statistics before, right? If you are the very reason you're listening to a talk for a master's program, I presume that you have a bachelor's degree. When you did your bachelor's degree, wherever time it is, you would have learned of things, or rather heard of good practices of statistics. For example, if you need to do an inquiry, you sample, right? You create a very random sample of data, right? And you try to analyze it. The sample must be highly randomized or stratified and whatnot with very good principles. You collect the data that is available, and then you analyze, and then you extrapolate to the rest of the population, right? These are very common techniques that people do all the time if you have studied the statistics in the last decade or so. But today, that belief, in a way, is being challenged. What do you mean by that? Today, because we are collecting data at such rapid rate, right? You have all the data, that's the first thing. The cost of storage has reduced so significantly. Many of you would have heard of this very infamous phrase that in the last, all the data you have in the world today, they are being created, or rather, all the data you have today that are stored in servers, they are created in the last 2 years, right? Then this phrase continues to be true, right? In the years to come, essentially because data is being created at exponential rate. The cost of storage has reduced significantly, and therefore we are capturing more and more, right? But more importantly, because of that, the concept of which error exists becomes very different. In the past, when you're sampling data, you want to ensure that there's no error in the data, right? Why? Because the moment you sample and if there's error, what happens? You extrapolate the error to the population, right? So your small sample that you capture for your data for the whatever analysis you're doing has to be very, very clean, right? Free from error. But today, because you're analyzing data, the entire population of data, the tolerance for error actually goes up, right? We must know that error is part of life, right? It's part of life. If you are data analyst, if you are using data for any other purposes, that becomes very, very critical. And I think this has caused a little bit shift, right? If you take that thought and apply to accounting or auditing for that purpose. In the past, in audit, you do a sample. You sample X number of transactions, and if there's something wrong with, if there's any of these transactions which are misaligned, right, if you will, right, then you can say that, hey, there's a major problem. Potentially, this would mean that there's a good chance that there's some issues with the accounts, with the books. But today, if you are trying to examine all transactions, then any misalignments sometimes do exist, but the question is when and in what instances this matter. I think this conceptual change, it's very, very significant, because once you're collecting all the data, analyzing all the data, error will always exist, and you must be able to live with it. We are, of course, in the course that I teach, we talk about new models. How do we handle error in the data, given that error will always exist? And how do we build models that essentially remove the noise and sort of distill the signal, right? In a typical class, I usually spend about half an hour. We have some cases where the students will go about doing activities around this point, right? This shift towards sampling to population. So that's one paradigm shift. So today, if you look at data, we are at this at a point where we are moving from a period of renaissance, right, where we have traditional classical statistical beliefs, to machine learning, where you're taking all the data. And this is a huge fundamental shift. So what are the challenges? I will talk about the challenges here very simply by showing you all this picture, right? To set off the sort of tee up the conversation. If you have 6 pictures over here, 6 individuals, right? The question is there, guess who is the criminal, right? Of course, again, this is a webinar. It's very difficult for me to have an interactive session with you folks. Spend the next 10 seconds or 20 seconds, look at these 6 individuals here. Guess who is the criminal? Make a guess. All right, I hope you have managed to make a guess, right? Studies have shown, right, that these are not random pictures that I got, right? This is actually from a journal article. Studies have shown most individuals, when they are asked to do this task, will select A, C, and E, the top row, as criminals. Why? A variety of reasons, right? But I will not go into the details of that, right? But the point is, if I were to ask you to pick a criminal, right, individuals based on our past experiences would select certain individuals that we think they look like criminals, largely because based on our experiences, right? If you have met individuals that are really bad, right, they might have a certain look and that's seared into your mind and sort of perpetuate that thinking. But the problem is, if you're trying to take that thought, right, because the very interesting thing about accounting and analytics is you look at analytics in any other fields, analytics in marketing, analytics in operations, and so on. What they are trying to estimate usually are generic trends. If you're in marketing, you're trying to find out who is the guy that is likely to buy from you, generic trends. But in accounting, the interesting thing is that we are trying to extrapolate rare events, right? We are trying to look for outliers. So outliers becomes very, very important. I wouldn't use the word very important, but more important in the field of accounting than any other fields, right? And as a result of that, there are some fundamental problems. The first problem is back to the example of the 6 guys when you're trying to sort of figure out who is or rather try to guess who is the criminal. The first problem is that if a human is to come up and say, hey, I think Mr. A is the bad guy. Why? Well, my gut feel. It sounds okay. But if a machine were to come up and say, hey, you know, that guy is the bad guy, the natural thing that people would ask is, what is the logic behind that? Why do you say that is an outlier? What are the logic? What are the steps, right? And it is a huge problem because the question is, humans make judgment, machines make judgment. But machine judgments, typically we need rules. And once you start writing down those rules, you're opening a can of worms, right? You can't rely on gut feel. If you have the time, take this word down. Just go back and search moral machine, right? Moral machine, right? And look for the experiment. It was a very interesting experiment that talks about, you know, can machine make moral judgments and why not, and why is it so difficult? It's a study conducted in MIT a couple of years back, right? Published in Nature. Very, very interesting article. So that's the first thing. The second is about issue about rare events. As I mentioned, in accounting, rare events are very, very important. We try to extrapolate rare events, but rare events themselves, or in fact, any analytics or any machine learning fundamental assumption is that history repeats itself. Do you think rare events repeat themselves? Maybe, maybe not, right? So if you're using data to build models to predict rare events, then the question is, will rare events actually sort of repeat themselves? Sometimes they do, sometimes they don't, and that's why making prediction of rare events really, really difficult, right? And of course, there are other considerations as well, right? Outliers, right? Most of the later, I think Kia Hong will be talking some aspects about what the next speaker will talk something about outlier detection and whatnot. You observe that when you are detecting outlier, one of the issue that we fundamentally face is that outlier is necessarily bad, all right? But outliers are different, right? They're not necessarily bad, right? If an account is an outlier, is it an issue? No, maybe, maybe not. So that brings about one key thing, which is it changes the role of accountants because you're essentially getting accountants to handle outlier situations, right? So the ability to handle exception becomes a very, very key skill that you are trying to build into accountants in the future, especially if accounting is going to be automated, right? Where you have machines making the various judgments and so on and so forth. So I think that's one key shift that we potentially might see in the future, which is how do you then handle exceptions and whether to know that are the exceptions good or bad. The traditional thinking, right? If you're doing sampling, back to the first, very beginning. If you're doing sampling, right, and there is an exception in the sample, then you say, hey, this is bad, right? The traditional accountant will say, this is not good, this is bad. But if you're doing this using all the data, the judgment to know whether this is good or bad is a little bit more nuanced, right? I hope you can get the point I'm trying to establish here. So I will leave you all, it's 15 minutes now, right? I've tried to be on the dot. I will leave you all with three things, right? So today we talk about how the concept of data has changed, right? You have moved from sampling to population, and why is it the case? It's because we have the processing power, we have the storage capacity, and storage cost has dropped significantly. The second issue we also talk about is when we mine patterns of wrongdoing, can we also, how do we do it in a way that is ethical, right? In a way that is justifiable. I think that these are very, very important things to consider as well. And finally, how do we model rare events, right? Events that are rare, right? Traditionally, we believe that history has to repeat itself, right? The rare events have to repeat itself. That's the first. The second is also, if you're trying to model rare events, one of the key challenges is you do not have lots of data. So imagine if you have 1 million transactions, of which 3 transactions have something, they're outliers, right? 3 transactions are outliers. The question is, how can you then surface the pattern of these 3 amidst, say, 1 million transactions? So there are techniques out there like SMOT and whatnot in machine learning that typically would try to extract those in very, very rare events. So these are some things that we cover in the course, and hopefully you folks will have the opportunity to join us. And that's the end of my section. I will hand over to the next speaker, right? Jia Hong.
Thank you, Prof. Goh, for your very interesting and relevant introduction. That makes my job a little bit more easier. And good evening, ladies and gentlemen. In this increasing complex and high volume data environment, the use of technology and data analytics offers great opportunity for the auditor to perform much more effective and robust understanding of the client and the environment, as well as enhancing the quality of an audit. In this segment, I will share with you some of the key benefits of analytics and why analytics is becoming so popular in accounting and particularly in audit. As this slide shows, better focus, it allows the auditor to better focus on the risk area, outlier, as Kim has mentioned, allows the auditor to increase the audit efficiency. In the past, where we used to look at document based on an eyeball on a very detailed, very manual way. Now, with the increase in technology speed and capacity, we can then look at all the documents, in fact, 100% of the documents in greater speed, greater accuracy. That brings me to the next point of increasing coverage in our testing. We can move away from sampling to 100% testing. And of course, we can also leverage on the technology, on the models that are available out there to do, as well as the external, internal data to harness these and to make more accurate and more meaningful prediction. Of course, all this must go towards increasing the audit quality. Having said that, stakeholders' expectation is one of the greatest driving force. Increasingly, stakeholders are expecting the use of analytics and technology in financial statement audit. In many jurisdictions, including Singapore, where audit proposal and tendering, a lot of time, the stakeholders, the directors expect audit analytic capability to be demonstrated. And in some cases, expecting the auditor to perform audit that includes the use of technology and analytics. So this is very much market driven. In the next slide, I will share with you the broad spectrum of analytics are being used. You look at the bottom spectrum, it can vary on the left from some very simple analysis that are already traditionally being done by the auditor. This may include looking at historical trend and pattern, to something more on the right where auditor employs complex tools to do complex modeling. If I were to map this to Gartner's 4 stages of data analytics maturity, really it varies. It ranges from the basic, simple descriptive type analytics to the more complex and more insightful, prescriptive, or even predictive or even prescriptive type of analytics. If I may, again, to superimpose in my next slide on the use of analytics in the audit firm on a client. On the left are some bubbles of typical analytics that are being done, but these are simple. Basically, they are leveraging on technology, including general ledger analysis, including journal entry testing, And then perhaps a bit more complex are the three-way matching the document to look at outliers. Auditor also a lot of time use simple visualization to complex visualization to understand trend and to zoom in to look at outliers. But increasingly, there are potential for auditors to move more to the right, which are depleted by the darker bubble, where the auditor can use regression, predictive analytics, and even clustering to predict and to tell more stories from the data. Let me now look at each of these areas very quickly to demonstrate to you how this could be done and how these are providing auditors insights. So the first one, general ledger analysis. So auditor could look at certain accounts, important accounts such as sales or profit, to look at the trend and to identify areas where there are potential risks. So in this example, a stacked bar chart is used where the auditor would then analyze and visualize the sales of copier over 3 years. So what can you tell from the trend? The first observation, of course, is the one in blue, in green, a declining sales of copier F. Right? Is this in line with the auditor's understanding of the business of copier F? In light of all the other copier that seems to be doing well, right? So if this is in line with the auditor's understanding of the business or the product, then I think that fits well. But if not, interesting question the auditor may ask is, why is there a declining trend? How much more product of copier F are there in the inventory? If there are, then there could be risk of product obsolescence. Have the management written off this obsolete product? Another interesting observation is the one in yellow, copier D, right? Interestingly, copier D from the visualization saw an increase saw a decrease in volume sales from 1.6 to 1.7. Then it picked up again 1.8. Why is there a trend of this sort in copier D? Is it because the copier is a seasonal product such that it goes up and down over the years? Or is there some special promotion being done to copier D, and why only on copier D? And quite obviously, if there are certain promotion or certain marketing being done on a particular product, the auditor would like to be careful or be mindful that is there proper matching of revenue? Is revenue recognized correctly in the right period? And the associated costs, are they properly being matched in the right period? So this is some simple visualization that the auditor can get a lot more insights. Another area is, which is again commonly done, is general ledger testing. In some of these next slide, please. In some of these corporate scandals that you are probably very familiar with, Enron, WorldCom, for instance, one of the classic problem behind WorldCom was management override control. And one avenue where they could override control is management could put through journal entry at the back of at the back end to book in profits or sales that are not that are fictitious. So in one of the audit procedure where auditor may employ cats to look at journal entry, so auditor could look at the journal entry. For instance, in this case, we look at the box plot of journal entry being put through by the key staff. So the key staff include from the left Ali, and there's this thing called auto. Auto means auto posted by the system. Then there's a Chong, there's a Emily, there's a Madam Ho. So this box plot shows the range and the upper lower quarter of transactions being booked through in terms of value by this respective clerk. So what can we tell? Well, firstly, Madam Ho, the range looks extremely wide. So is it in line with the auditor's understanding that Madam Ho is in a row to book through a journal entry that varies from something like 18,000 to 38,000? Looks very wide, But what is perhaps more interesting is if you move somewhere to the middle, Chong, right? Chong is booking through entries that are within a very small range that looks reasonable. But then, as Kim Huat discussed earlier on about outlier, you look at Chong. Well, there are some interesting outlier. Why is Chong booking through entries as huge as 60,000? Is it within Chong's capacity? So this visualization allows the auditor to look at outlier and to investigate into areas where there are significant risks and potentially significant fraud. Next, the auditor may look at may do three-way matches. Historically, the auditor will perform sampling. Yeah, next slide, please. Historically, the auditor performs sampling. For example, in testing sales, he picks up some sales invoice. He then look at the the underlying document, are these supported by customers' order? Are these supported by actual delivery of product that went to the genuine customer? But sampling, auditor can only do certain number of sampling because it's very tedious, very time consuming. Now with the great technology, speed and capacity, auditor can do 100% matching of this document. So in this illustration, the auditor pulls up all the sales transaction involving some 700 transactions, and he matches the sales invoice to the delivery document, to the customer order document, and he matches them to identify whether the quantity match and whether the prices match. So theoretically, logically, if there is an order that's being placed by the customer, the order quantity and price should equate to the order quantity and price that is being shipped to the customer and then invoiced to the customer. So quite interestingly, you look at this data, the output at the bottom, most of them match very nicely, which is not quite expected. But a good number of 16,000 do not match by quantity. Another good number of some 17,000 do not match by prices. So these are what we call outlier. Right? And it then allows the auditor to then zoom into these to identify, and these are potentially errors or misstatement. Of course, there could also be valid reason why they do not match. But the technology now allows auditor to zoom into where the risks are. But having said that, it in itself brings some problem to the auditing profession. How then, once you start running 3-way match, once huge number of outlier identified, then you would have to do more work to resolve them. If not, then they are left unanswered, exposed. An extension of this 3-way match is where the auditor can again do matching of user conflict. Again, harnessing on the speed of technology, look at the computer, look at the user profile. Internal control requires the basic rule of internal control dictates that some fundamental duties that are not compatible should be performed by some different people. That's what we call segregation of duty. So in the context of sales, the person who makes the books, the order, should not be the one who raises the invoice, should not be the one who delivers the product to the customer, should not be the one who collects the money. If it's done by the same person, then fraud can perpetuate. He could make the sales, deliver the product, collect the money, and then not record the sales, right? So a similar concept where matching of user conflict can be done to identify areas where incompatible functions are done by the same individual, which then indicates significant potential risk of control weakness. Moving from 3-way match, auditor could also perform things such as regression analysis. So in this chart, regression analysis, a scatter plot of all the transaction is plotted. On the x-axis is the sales, and on the y-axis is the profit. So then a best fit line, the one in black, is drawn. So this best fit line really is an average line that shows on whatever level of sales, this is the expected level of profit. So you look at the line in red for about 700 sales, or sorry, is it 4,002 value of sales, you expect 700 profit. Right? So this is the expected profit based on the 4,002 value sales. Then you look at the bubble on top, the actual. If the auditor picks a sample for the sales value of 4,002, the profit is actually not the expected amount of 7,000, but of 700. Instead, it is 1,007. So the question is then, this analysis allow the auditor to question whether the 1,000 deviation, the actual deviation from the expected, is it reasonable? And again, this regression analysis allow the auditor to look at areas where the risks are probably higher. So you look at this series of bubble which represents transactions. Which of these bubble you think has got the highest level of risk? Are the bubbles on the top right, or are the bubbles on the bottom left those with higher risk? You're probably right. Okay, next slide. The bubble on the left, are those transactions with lower sales value. But if you follow those, the black line, the expected line, we expect the profit to be higher than what they are actually now. And if you zoom into this transaction, and these are actually all sold to a customer by the name of Someone Inc., and these are all sold by a sales rep by the name of Anyhow, doesn't it tell you that the risk is very high? there's a very high risk that this could be sales performed fictitiously or wrongly by a same particular person to same particular customer. A form of regression, a more complex form of regression analysis could be in the next slide, where the auditor may perform predictive analytics. So based on internal, external factor, the auditor can create a decision tree, such as chart machine learning model, where he can then predict based on the various internal factors such as store size, number of product, external factors such as the weather, such as the mall traffic, to predict the sales of each of the 50 stores of the company. So now you look at this graph. The blue line shows the actual sales, right? The red line shows the predicted sales. So if this model is proven to be accurate over time, now tell me which of the stores from 1 to 50 are likely to be the stores with higher risk of error and fraud. So you zoom in, and next click please. You are again probably right that you look at store 19, store 33, store 36, store 40. These are the 4 stores where the predicted sales, the actual sales, are very different from the predicted sales. So analytics, predictive analytics, is a very powerful model, not to tell the auditor where the errors are, but to direct to the auditor on where the risks of the error are. Then allow the auditor to focus on the risk area, increase the quality of the audit. Last but not least, clustering analysis. Traditionally, if an auditor audits, say, a retail company with, say, 1,004 stores, right? He can't be running everywhere to do checking on all the 1,004 stores. He need to zoom into where the risks are. He need to perhaps profile the stores to group them into some meaningful group. So traditionally, auditor will organize the 1,004 stores perhaps into something at the bottom pie chart, where he may group them by big stores, medium stores, small stores. But is it the best way to group the 1,004 stores? Not necessarily. So with clustering model such as K-means model, auditor can run the various factors such as the inventory level, store size, the manager tenure, the last time that these stores were audited by the internal auditor, the proximity of the stores to the metro station, so and so forth. By running some of these factors, the auditor then, the result then, produce 3 natural cluster: cluster 1, cluster 2, cluster 3 on the right. And these cluster are those where factors such as store size, managerial tenure, inventory level have got the highest predictive value. So clustering allows the auditor to group the transaction into meaningful natural group, from which then he can then zoom into each of these clusters to perform audit procedures. He could also look at some of these transactions that do not quite nicely fit into these clusters, and these are likely to be potentially outlier and potentially higher risk. So that kind of sums up some of the common tools that are being used, from the simpler one to the last few, clustering, predictive analytics, more complex one, but not common, but potentially could be used. So in the next slide, I basically sum out some of these challenges which my colleague Prof. Goh has earlier mentioned: data reliability, IT controls. When you run analytics, the result is as good as the accuracy of the data, and we cannot, as what Prof. Goh says, we cannot expect good quality, but we also cannot verify the data before we run the analytics. If not, you will never get started. So data reliability is always a challenge. IT control is always a challenge, because these data are processed by the system. How reliable is the system? Not to forget the tools that we use, the modeling tools. Are they of good quality? And how far do we need to follow up on outliers? And all those things that we mentioned, all these analytics that I just discussed, they are really at best 100% matching, 100% risk assessment. All these outliers, exceptions that are being thrown out, at best tell the auditor that there are some potential problem for him to do more work. So one must be mindful that 100% testing and 100% risk assessment is not equal to 100% audit evidence. So these gaps still need to be breached. But having said that, the potential for data analytics application in audit is really tremendous, and is limited only by one's creativity and imagination. With that, I hope that I have shared with you some useful insights on the state of affairs in the current auditing profession, which in our course, we will expose you to some of these, analytics, some of these tools that are used in the market. Thank you very much. I hope you enjoy this segment of the presentation. With that, I will pass on to Prof. Chu to discuss on the COVID and accounting implication. Thank you.
Prof, we can't hear you.
Okay, all right. Okay, thank you, Kia Hong. I didn't have the chance to introduce Kia Hong just now. Kia Hong is a senior lecturer from the accounting division of the Nanyang Business School, and he has extensive experience in the field of auditing, as you can see. So in our MSc accountancy program, he teaches in 2 courses, namely assurance and auditing, and risk management and advanced auditing. All right, thank you, Kia Hong. Now, we are going to shift gears a bit slightly. We're going to move from technology and talk a little bit now about COVID-19 and the financial reporting challenges due to COVID-19. Right? So I'll just spend a few minutes on this. Next slide. Okay, the first thing I'm going to talk about is accounting for leases. You know that in many countries, when we had the lockdown or circuit breaker, a lot of retailers really suffered greatly. And so their landlords or their lessors would have given them rent concessions. This could be like reduced rentals or rent holidays. Now, typically in a lease agreement, when you have things like rent concessions, it will be a change in the lease payments. All right. Now, once you have a change in lease payments, it can get quite complicated because it could be a lease modification. Now, you can imagine for a lessee who has thousands of lease contracts, if you have all these rent concessions and you treat that as lease modifications, you have to go and analyze all their lease contracts, right? Which would be very complicated. So the Accounting Standards Board has stepped in and actually tried to give some timely relief to lessees by allowing them to treat COVID-19 related rent concessions as if they were not lease modifications, right? So they don't have to go and assess all their individual lease contracts. So what is the meaning of this? So they can treat the rent concessions as variable lease payments, right? And basically the corresponding lease liability will be de-recognized and they will recognize a gain in their P&L. Right. Now, just one thing to note, because some people have asked this question, what about property tax rebates that the government gives to landlords, which the landlord must then pass to the tenant? Now, those are not rent concessions because they are independent of the lease agreement. Okay, so those will be treated as government grants, right, which is under another standard. Okay, next slide. Okay, going concern issues. Now, basically, the accounting standards require management to assess the company's ability to continue as a going concern right up to the date that the financial statements are authorized for issue. Right? Now, just to give you an example to make this clear, AirAsia recently released their 2019 earnings, right? And the auditor said it was prepared on a going concern basis. What caused alarm in the markets was that EY, the auditor, said that there are material uncertainties that cast doubt on AirAsia's ability to continue as a going concern in the future. Right? This comments actually caused the share price of AirAsia to drop by 11%. Now, basically, what EY, Ernst & Young, is basically saying that in the future, for AirAsia to be able to continue to operate as a going concern really depends on their recovery from the COVID-19 pandemic, and more importantly, their success in being able to fundraise and quickly bring in cash. All right. Okay, next slide. Okay, events after the reporting period. Now, basically what happens here is that a lot of companies, let's say your year end is 31st December, your financial statements will only be authorized for issue maybe a few months down the road. In between, if there's any event that basically may have an insignificant impact on your financials, there are 2 possibilities, right? Now, if it's an adjusting event, you have to go back and adjust your financials before they are released. Now, what is an adjusting event? It's an event that provides evidence of conditions that existed at the end of the reporting period. Right? If it's a non-adjusting event, then you don't go back and adjust the financials, but you have to do a disclosure if it's going to have a material effect on your financials, right? So the big question here with COVID-19 was that for a lot of companies that 31st December year end, is COVID-19 an adjusting event, right? The general consensus now, all right, from all the accounting standard boards is that no, it's not an adjusting event because at 31st December 2019, most people were not even aware that there was a viral outbreak in Wuhan, and nobody basically thought that it could be as serious as the pandemic that we have now, all right? Okay, so for most companies with 31st December 2019 year end, non-adjusting event, no need to adjust financials, but most of them would have to do some disclosure in their financial statements because I would presume that for a lot of companies, this would be a material event that would basically have some impact on their financials down the road. All right. Okay, next slide. Now here we are talking about financial assets. So this includes your accounts receivable and any financial assets that are not fair value through profit or loss, right? So here we are basically looking at how much provisions you must provide for losses, right? Credit losses, expected credit losses, and the impairment loss that you recognize in your profit and loss. So for a lot of lenders and financial institutions, all right, with exposures to borrowers in highly affected sectors like tourism and travel-related businesses, they really have to do a very careful assessment of and project the expected credit losses, right, and do probably higher impairment losses and loss allowances. Right? Now, the challenge here is that basically in determining whether your borrowers are going to experience short-term liquidity challenges or whether some of them are experiencing more troubles and are having fundamental solvency constraints. So this will impact on whether on our 12-month losses. If it's more short-term, it'll be 12-month losses. But if there are fundamental solvency constraints, there'll be a lifetime losses. Right? Now, a lot of companies basically estimate their expected credit losses using models. They are using historical data, okay, 5 to 10 years data. Right? Now, but we are now with COVID-19, we are operating in a totally new environment, and they may have to adjust these models that they use to estimate expected credit loss. They were to think of things like, is the economic downturn as a result of the pandemic, is it going to be short-term or more long-term? And what about the role of the government support? Would it help to mitigate some of the losses? Right? So this is just a very brief overview of some of the key accounting changes that companies will take into account, for accountants and auditors also due to the COVID-19. Right? And we try to cover also these topical issues when we teach our financial accounting courses. Right? Thank you very much. I think we will hand you now over to a presentation on the Master of Science Accountancy program.
Okay, Prof, do you want to do a Q&A session with the panelists first? With our audience?
Do that first. Yeah, all right. Okay. If there are any questions, if not, then we'll move on to the MSc Accountancy presentation.
We do have some. Okay. Let me just share. Share some of the questions. The first question that I have is, does NTU accounting major teach data modeling, technological things? Yep.
We have a data analytics course or machine learning course, right? But I don't believe we do modeling. Yeah, no. That is more in our finance course.
Okay. So touch on the second one is talking about, do we need to be expertise at coding to be future auditor? Although I already started studying R, Python, and some other programming languages.
So the short answer, let me take the question. The short answer is no. Okay, what is essential to an auditor, the future auditor or the auditor now, is you must have great analytical skill, and with this model report or this visualization being presented to you, how do you interpret them? Then how do you intelligently interact with the management to challenge them their explanation? Okay? So would the coding skill help? No, but no, in our course we do teach some coding. That would be useful, because at the end of the day, as auditor, you interact with management, you interact with your engineer and your programmer for them to write up the models. So a bit of this language will help you in communicating to your engineer or your computer scientist, and as well as your client.
Okay, I think we have 3 more questions, so we'll just answer those before we go to the next stage. The next question I have is, what's the average age of students in the MSc accounting program?
Regine, you just sent the slide. Do you remember?
I think it's about 23.
Okay.
In our current cohort, it's about 23, yeah.
Okay, so the next question is a rather long question. It's actually asking Prof. Go regarding this. So it's talking about the entire draft from sample to population, but it's making an observation that taking into consideration the entire population can be like more time-taking, time-consuming, expensive, inaccurate in some situations. What would your take on sample be if it's random and well represented? What would be a good way to look at it? So I'm looking at the question from here.
Let me clarify. I hope I get the question right. So essentially, trying to compare 2 options. One is that you do an entire study on the whole population versus a randomized sample, which is much smaller, but it's representative. Are there any pros and cons for that? Now, the answer is yes, right? There are some pros and cons, largely due to the kind of techniques that you're using. If you're using traditional statistical technique and whatnot, then I would say both are the same, right? In fact, traditional statistical technique, I'd rather go for a small sample. But if you're trying to do techniques, or rather you're trying to use techniques that are unsupervised but in nature, right? Techniques whereby you are trying to mine for very, very minute patterns, right? Then a large population will be useful. So take, for example, you're doing a recommender system, right? All the stuff you see on Netflix and Amazon, right? You can't use sampling. You have to use the whole population. And we can do that is because we have the computing power today, right? So there are some pros and cons, but if you're doing just statistical stuff like regression, then sample is fine. There's no need to take the whole population. In fact, whole population is bad, right? You have a series of problems, right?
Okay, we have a lot of questions, but I think we have time for only one more. So the next question is, does NTU MSc studies prep for accounting's pro certification? I think it's asking whether are we certified for our accounting program. The person is asking because he or she is an international student, but due to COVID, the person is also asking whether the classes will be conducted online in the meantime, or is it going to be physical classes? So, Prof.
Okay, maybe the second part of the question first. For trimester 1 is probably we are going to start online. Our promise to students always has been that once borders open, we'll bring them in. And I just heard recently from one of my co-panelists here, Prof. Goh, that some graduate students may actually start coming in August and maybe September, right? So, but a lot, I think, will depend on how the COVID situation pans out. If things improve, we can bring in people earlier. But I think trimester 1 will be online, and hopefully trimester 2 and 3 will be in person. And then the earlier question is, yes, our program would qualify you to basically take the chartered accounting exams in Singapore, right? It will bring you up all the way to the professional level to take the exams. And also we have a lot of exemptions with other international professional bodies, right?
Okay, so keep the questions coming. If let's say you have any other questions that is relating to the MSC's the programs that we offer here, we are happy to answer also at the end of this at the end of the presentation later. So maybe I pass the time now to Regine, who will be introducing about the MSc program in NTU.
I'd like to thank my 2 panelists who will be leaving us. Thank you very much for spending your evening with us.
Thanks for having us.
Thank you.
Thank you, Prof.
Thanks. Okay, see ya. Bye.
Bye.
Okay, so thank you for joining us this evening. To hear us, hear our panelists talk about the different, about accounting in this time of disruption. And I'm very pleased to be able to share with you, give you a short overview about the NTU and the specialized master's program that we offer at the Nanyang Business School. So my name is Regine. I'm from the Graduate Studies team at the Nanyang Business School, and I lead the Specialized Master Suite at the Business School. So, okay, just a little bit of a recap about NTU for some of you who does not know about NTU. NTU is ranked 13 globally in the latest QS World University Ranking. And as a young university by the QS Young University, we have been ranked the world's top young university for 6 consecutive years. So as a young university, I think we are very, very proud of our achievements. So about the Nanyang Business School. We have close to 7,000 students, and that is including our undergrad students. NBS is a very research-oriented school where we strive to also provide very industry-relevant education, preparing our students for the workplace. And Nanyang Business School, as well as NTU, is a globally recognized university and business school. And our programs are also, many of our programs are highly ranked among the tops in the world. And we're also very proud to have world-class faculty at the Nanyang Business School. I believe many of you would agree with me that faculty is at the heart of a program. And at Nanyang Business School, we have more than 200 faculty members from close to 30 countries, and they're top graduates from global universities. And many of them are also consulting to global MNCs, whereby they are able to bring you, more than just academic, learnings, where they're able to give you real world, what is happening in the real world and application in the real world setting. And of course, their teaching skills are well rated, first rated. And here you see on the screen is actually Professor Vijay Sethi. He has been a Nanyang Business School professor for more than 2 decades. And in 2013, he was actually voted the World Best Business School Professor. Yeah. So at Nanyang Business School, these are some of the faculty that you will get to experience in any of our master's program. So at the Nanyang Business School, like I mentioned earlier, we're very research-oriented and research-intensive. So we also have 12 different research centers under the business school, doing very cutting-edge and impactful research. And you can see the list of the different research centers that we have on screen. So without further ado, what I'll do now is to introduce you to 4 graduate programs that are taught in English that we offer at the Nanyang Business School. So at the end of my presentation, we can have a Q&A where you can ask me any questions about any of these master's program. So these are the 4 master's program where I will be introducing to you: the Masters of Science in Accountancy, the Masters of Science in Business Analytics, Financial Engineering, and Marketing Science. So first up is the Masters of Science in Accountancy. So I think just now our 3 panelists, Professor Chu, Professor Goh, and Mr. Goh, that you heard earlier, are actually teaching in our Masters of Science in Accountancy program. So, and I'm very pleased to share with you that actually accountancy is actually a very strong program in the Nanyang Business School, because the school actually started as a School of Accountancy. It was only renamed later as the College of Business in the Nanyang Business School. Yeah. So you can see that we are very strong in this area. So again, our Masters of Science in Accountancy, I think you have heard that we have data analytics program modules incorporated into our curriculum, because we understand that these are the new skills that are needed by accounting professionals these days. And on top of that, we have also recently, I think last year, introduced the forensic accounting modules as well. And this module is actually co-developed with our industry partner, PwC, where the experts from PwC actually teach in these modules as well. So, which brings to the next point that our module are very industry relevant, which means that you are able to apply what you have learned in the classroom with ease into the real world setting. Because like I mentioned, they are co-taught with domain experts from the Big Four accounting firm, and many of these are also co-developed together in consultation with them. And in terms of the teaching style at our program, we use interactive seminar style teaching, and a lot of case studies are used in our program so that discussion can be made, and students are able to apply theories into a real life scenario in the case studies, so that when they are out in the workplace, they are able to perform and excel at their job. And the accounting standards that we teach in our program is actually the International Accounting Standards. And as mentioned by Prof. Chu earlier, our programs are accredited by many accounting bodies. Of course, the Singapore CA, as well as like ACCA, CPA, Australia, etc., where you're able to gain exemptions to a number of their papers. So on this slide, you will see the overview of our program. So the program can be completed in 1 year if you are doing it on a full-time basis, or if you are residents of Singapore, you're able to do it on a part-time basis, which means you take 2 years to complete it. So our 1 year program is split into 3 trimesters, and each trimester you take about 4 to 5 modules. And for this program, it is a fixed curriculum program whereby there's no additional electives for you to choose from, but you would be doing it in this sequence. And for many of you who wants to complete in 1 year, you can do so. And for those of you who wanted to go on an extra at the end of the program, you wanted to look for an internship or an overseas exchange with a partner university, our program offers you that option. So you can choose to complete it in 1 year or 2 years if you're doing part-time, and then you can extend it with an internship or overseas exchange. Okay, so the next program is our Masters of Science in Business Analytics. So this program is actually the latest to join our suite of specialized master's program at the Nanyang Business School. So in fact, actually in July, right now we actually have our first batch, cohort from this program. So our business analytics program is actually helps to develop in you a business acumen and allows you to utilize data management tools to derive insights from complex data sets. So in some ways, you're like the bridge, between the technical data and then coming up with insights. And these insights are very important to management because they drive strategies and they add value to a business. And in terms of our program, our program modules, we have a lot of focus on key emerging areas such as artificial intelligence, machine learning, and blockchains are some of the modules that are taught in the program. Again, I think industry relevance is also highly featured in our program because this program was actually developed in consultation with key industry partners, where we are able to use actually real data set from these industry partners, and our students are able to use these data and apply what they have learned to turn them into insights. And of course, in our program, we also have industry projects incorporated as part of the curriculum. So you are able to actually do industry project with some of our industry partners. Yeah, and the program is also co-developed with the School of Computer Engineering and the School of Physical and Mathematical Sciences in NTU, where faculties from these colleges are teaching in our programs, and it also enables our students to actually take modules, cross-listing modules from these other schools. So over here, this is the overview of the program structure that you see. Again, this program is a 1 year if you complete it in a full-time mode. And if you are thinking of doing it on a part-time basis because you want to work and at the same time do this program to upskill yourself, you can do that. You can complete it in 1.5 years, 18 months, or even 2 years. So again, each year is split into 3 trimesters, and these are some of the modules that you take. But for these, we have different electives for you to choose from. So you can choose from electives that is offered by the Nanyang Business School or from the College of the Computer Science, Computer Engineering, or from the SPMS. And over here, we also offer the internship module at the end of the program or overseas exchange opportunity with our partner university. But of course, if you choose to complete it without going for all these optionals extra, that's fine as well. Okay, the next one is the Masters of Science in Financial Engineering. This is one of the most established specialized master's program that we offer at the Nanyang Business School. In fact, this program has been established for more than 20 years. And these are some of the highlights of the programs. So our program has a long-standing collaboration with the Carnegie Mellon University, where a select group of students are able to spend 7 weeks in Carnegie Mellon in the US, studying 4 modules over there. And as part of our curriculum, we have an exclusive speaker series exclusively for our MFE students, where we invite industry experts and visiting professors to be interacting with our students. Yeah. And I would have to say that our program, MFE program, has one of the most comprehensive kind of curriculum. It actually combines studies from computer programming, finance, and mathematics and statistics. And it's spread over 24 modules. So we can imagine the kind of a breadth that you cover in this program. And also this program also has faculty from the School of Physical and Mathematical Sciences, where faculty also teach in our program. So over here is the overview of our program. You can do it in a 1-year full-time schedule or 2 years on a part-time schedule. So over here, actually, if you look at our trimesters, we actually breaks them down into 2 mini terms in each trimester, which is why you can cover 24 modules in this 1 year. And it's over only here in the month of May to June that you actually have the option to go to Carnegie Mellon, and these are the 4 modules that you do over there. And again, this is the options that we offer to the MFE students, that you can opt to extend your studies with the optional internship module at the end of your program, or you can choose to complete your program. Okay, finally, this is our Masters in Marketing Science program. In some ways, this program is kind of like new because we changed the format of the program, and we also revamped the curriculum to update it. So the program was previously called the Masters of Science in Marketing and Consumer Insight, where the format is more of a modular part-time program. Yeah, so it's a little bit different, and we also changed the modules in the program. So now with our marketing science module, the heart of the program of any of our marketing program is still in consumer insights, because we believe that it is through a thorough understanding of consumer behaviors that we are able to reach out to them through product or services that they really need. And of course, we need to be able to utilize all this insight and put them into a proper marketing frameworks, which is why our program also brings you through marketing, consumer insight, and of course these days we cannot escape technologies. Disruption is also, disrupting the marketing campaigns, marketing landscape as well. So we have to learn how to utilize different marketing technologies to maximize our marketing performance. And in our program, one of the key feature is we have very innovative modules, modules such as AR, VR, and AI in robotics in marketing, ethnography, neuromarketing, and neuroscience. So these are all very interesting and innovative modules that you don't really see in many marketing programs, and we teach them in this program. And also our program is very practice oriented, where our students are able to go on trips to visit key industry partners. We work on case studies and company projects as well. So which means that you are able to really apply classroom learnings into real world setting. So our program for now is only offered in a full-time schedule, so you can complete it in 1 year. So again, this program is a fixed curriculum program. So at in each trimester, you actually get to do 4 modules. Okay, so right now I'll go through the different admissions requirements for our program. So the first one is the Masters of Science in Accountancy. Like I mentioned, you can do it 1 year full-time or 2 year part-time. The tuition fee is Singapore dollars in $45,000, and we only have one intake per year in July. So our application, we are not accepting application yet, but we will start accepting application from end of August, and these are our application deadlines. But we actually practice a rolling admissions, which means that when a complete application is received, our admissions team will actually process it, and shortlisted candidate will be invited for admission interview. So for this program, we do not require any work experience. You need to have a bachelor's degree from any discipline and a GMAT or a GRE score. TOEFL and IELTS only if your degree is not taught entirely in English language. Okay, for financial engineering program, again, is 1 year full-time or 2 years part-time. The tuition fee is Singapore dollars, 56,000. So our intake is the same as well in July. So for this program, our deadline is slightly different. The round one is in 15 November and the final one is in 28 February. So again, for our specialized master's program, no work experience is required. However, for the MFE program, we do require your undergrad major to be a bit more quantitative because the program is very quantitative based. So it is good if you have an undergrad major in engineering, sciences, mathematics, statistics, finance, or even computer engineering. So definitely a good GMAT or GRE score is required. TOEFL or IELTS only if your undergrad degree is not taught in English language. So for our business analytics program, you can do it on a full-time 1 year or complete it in 1.5 years over a part-time basis. The tuition fee is Singapore dollars, $52,000, and the intake is in July. So for this program, we actually have 3 rounds of deadline, as you can see over here. And again, we will start accepting application from end of August. So this program also does not require any work experience, and we accept an undergrad degree in any discipline. So GMAT or GRE score is required for this program. TOEFL and IELTS only if the degree is not taught in English language. And finally, our Masters of Science in Marketing Science. It is a 1 year full-time program. The tuition fee is 45,000 Singapore dollars. July intake and 2 rounds of deadline, 31st January and end of March next year. So no work experience is required, and also your undergraduate degree can be in any major. So for this program, it's the only program that is not compulsory to have a GMAT or a GRE score, and only TOEFL and IELTS is required if your undergrad degree is not taught in English language. So just a brief recap, all our specialized master's program do not require any work experience, and all the program requires GMAT except for Masters of Marketing Science. So again, we only have 1 intake every year. So once we start, when we start accepting application, which is from end of August this year, if you're really keen to be to apply to the program, I encourage you to work on your application early and submit it early, because the earlier you put in your application, the earlier we're able to process your application. Yeah, so I would like to also highlight that at the Nanyang Business School, we also have a careers office, and our careers office is actually dedicated for the graduate students in the Nanyang Business School. So over at the GSCDO, in short, that it is called, we have a range of career coaches that provide one-to-one career coaching to our students. They also organize a comprehensive suite of career workshops, gearing you up to, for the workplace. They also organize, networking, employer events for you to network with prospective employers. So these are services that we provide for all our graduate students. So right now, just quickly, some of our alumni testimonials. So we have Yang Shuai. He graduated from our Masters of Science in Accountancy. He's currently working in MUFG Bank in Singapore. So he chose Singapore NTU to do the program because NTU is very well known for its accountancy program. And not only that, he also is equipped with necessity is to become a business talent and excel in his job. And next one, we have Larissa. She's from Norway. So she recently graduated from our program, and she has gone back to be in the consulting in Accenture back in Norway, where he continues to work with clients in the accounting and the finance sectors, helping them, in the consulting with them. So he chose Singapore for its a vibrant financial hub and multicultural city, as well as, she's able to gain in-depth knowledge in finance and accounting. So next is our financial engineering alumni, Sing Long. He's currently working in Shanghai. So he actually has a very different undergrad major, and he decided to switch to finance. So while the program was challenging, but it was comprehensive, and he gave him the required exposure, where he is now able to work in a fund management organization. So Prasad came from an engineering background, not in financial engineering. If I am not wrong, it was from aviation. So he decided to switch into the finance sector. So he did our program, and it gave him the confidence, to pursue a career as a trader. Yeah, and he's even writing his own algorithm and trading strategy now. So I've come to the end of my presentation, and we will open up the session for a question and answer. And I would like to just highlight that, we also have online chat sessions available next week on Wednesday and Friday, where you're able to, you can scan the QR to actually, sign up for a coffee chat session with us if you'd like to know in greater details any of our specialized master's program together with me or my colleagues. Yeah. So right now, I will open up the session for Q&A. Yeah, Kenny, do you mind helping us with the questions?
Yeah, I've assigned some questions to you. So I'm not sure whether Prof. Chu and you have seen it. So Prof, yeah. Okay, so the first question that I have here is, I would like to know do we need GRE or GMAT? Seems to be a very common question. What kind of So is there any situation where we can be exempted from it? So yeah, would maybe Regine like to answer this question because it's more general for all the MSCs program?
Okay, sure, definitely. So all our MSCs program, with the exception of marketing science, require a GMAT or a GRE score. So yes, but in some cases, our Masters of Science in Accountancy, we actually offer some case-by-case basis exemptions. So some of these exceptions could be when you graduated from NTU, NUS, SMU with the second upper honors and above. These are exemptions that we are able to offer you. And on some cases, if you have more than 5 years of work experience in a big organization in a related field, we are able to look at that on a case-by-case basis. Yeah, but I mean, if you want to know more about your eligibility, I really encourage you to sign up for a coffee session with us. Yeah.
Okay, the next question is wanting to know if the business analytics prefers relevant experience applicants over freshmen. So perhaps I can answer this question, or Regine.
Yes.
So my name is Kenny. I haven't introduced myself, but I'm also the recruitment and outreach manager for the MSc in Business Analytics, so working with Regine. And over here, we also have Erica, who is in charge of the MSc of Accountancy program. So for the Masters of Science in Business Analytics, we don't have a preference over one over the other. To be frank, we don't require work experience for the candidate, so you can just apply without work experience, and that will be fine. So the next question for Regine, I guess. So for the finance or accountancy, how is the part-time schedule gonna be like? Regine, maybe you would like to share, or Erica?
Okay, so maybe I'll try this. So for the part-time modules, right? So actually, some of our modules are actually taught in weekdays during the evening at the One North campus, which is opposite Buona Vista MRT station. So for modules that are taught in the evening, you're able, it's more for part-timers, so they are able to join us after work. And some of the modules are also taught on Saturday as well, which will be held at the NTU main campus. Yeah, so in every trimester, some modules will be taught during the daytime and some will be in the evening or on Saturday, which is why part-time students are able to join together with our full-time cohort. Yeah, and this is the same for the business analytics as well, the kind of timing for the classes. And for financial engineering, all the classes are actually on weekdays evening and on Saturdays. Yeah.
Okay, so the next question, I guess, is for Prof. Chu. So it's asking about what will be a competitive score for GMAT for MSc accountancy program based on.
I think to give you a good gauge would be to look at our average, right, for the intake that just came in, which is around 690 something, right?
Yes,
Yeah,
that's right.
but we look at a lot of factors. Like if you have, I think as long as you can get 600 and above, all right, we'll consider your application. If you have a very good degree from a very good university, we may be willing to live with a lower GMAT. All right, so it's not just the score alone by itself, all right. But if you are below 600, it's very risky, all right. We may advise you to take it again, all right. Some people coming from overseas where we don't know your universities very well, we may need 650 and above. Right, so we have different requirements, but I think roughly you know the ballpark range already. Yeah.
Sure. Okay, this one I think is more suitable for Prof. Chu to answer. It's asking, this student has gotten a bachelor's degree already and had landed herself a job at a Big Four accounting firm in her local country. She'd like to ask, to your best knowledge, when is the best time for her to apply for MSc accountancy? Is it better after 1 to 2 years of work experience, or is it better to pursue the certification first?
I would think that if you are in a Big Four firm, and let's say your first degree was not in accounting, you may want to quickly do this so that you can qualify to take the CA exams, right? Because a lot of the Big Four firms are pushing their new hires to get the CA. All right, so I wouldn't delay, and usually the Big Four firms are quite good. They will give you time to take the CA exams. But the first thing is you need to qualify to take the CA exams, and our MSc accountancy will qualify you to take the CA exams, right?
Yeah. Okay. So this one, I guess I'll get Regine to answer. Any full scholarships available for the MSc program? Quite a few questions on scholarship, so perhaps this will be
Okay,
an
sure.
over-encompassing question.
So, well, this is a very popular question indeed. For the Nanyang Business School, across all our specialized master's program, we do offer a partial scholarship that is merit-based. So we do not offer full scholarships at the Nanyang Business School, but partial scholarship. And if you're NTU alumni, you actually get 10% of the tuition fee. But I would like to say that in terms of like our financial engineering program, actually the MAS actually does offer full scholarship based on merit to Singapore citizens. So you can check out on their website, as well as our business analytics program. IMDA also offers full scholarship for Singapore citizens as well. So do check out on their website, or even on our website, we do have a link to those websites. Yeah.
Okay. So the next question I have is, how many students are generally accepted for the MS for the data analytics? So perhaps I'll just answer this question. It's about 100 students. We are aiming for about 100 students per year lah. So yeah. Okay, the next question is okay, this one is quite easy. It's asking when is the application going to open for all the programs. So maybe just to say.
Yeah. So yeah. I'm sorry, Erica. Do you want to say?
Okay, maybe I can chip in here. The applications portal is actually opening up in end August. In fact, we have a postgrad fair coming up on the 29th August. So if you are keen, you can refer to our MBS website, and the link will be provided for you to register for the postgrad event. Thereafter, the admissions portal will be open for you to apply for your postgrad programs that you are keen in.
Okay, I just want to add on for the postgrad fair, unlike other years, this year will be an online event. So even if you are staying overseas, you can come in
Yeah.
and join us for the live chat and to talk to our professors, listen in. So it's a very good session. So I would highly encourage all of you to try to register for it.
Yeah, actually, yeah, that's right. Actually, I would like to put in just another sentence is that we also have live chats where our current students and our alumni are also helping in the live chat, answering all your questions. Probably better than I do. Yeah.
Okay,
Right.
so I think we
Yeah.
have time for maybe 2 more questions. I'm sorry for the rest that I couldn't answer today, but there is a lot of interest. So the next question is asking, is a business or accounting degree sufficient for MSc Financial Engineering? Is there a prerequisite? So I think just now, Regine, you have covered some part of the requirements, which is that it must be a very quant-based degree to start. Yeah. Or
Yes.
demonstrate
So
good
a
strong.
business degree, depending on what is your major in your business. If you are doing HR or marketing, and maybe you don't have enough of the quant preparation. But if you're doing finance, accounting, we do have students with these majors excelling in the MFE program. It really depends on your own, how quant. How good you are in the quant methods, and because it is a very rigorous program, and so you must be prepared. You must really love all the different statistics, mathematics, programming, etc. Yeah.
Okay. I think we come to the last one. This one is a very popular question. It's also quite in time for this COVID situation. It's asking, due to the COVID situation, a lot of them can't take TOEFL or GMAT or GRE at this moment. Can they apply first and then after that submit their GMAT, GRE or TOEFL or IELTS at a later date? Would that be acceptable?
I think as August is only at the beginning of the whole application period, we have most of our program have until end of February and March for the final deadline. So you can submit your application first and then give us the score later. But do note that some of the programs, TOEFL and GRE are compulsory. So without those scores, we are not able to process it. But actually, from what I understand, a lot of countries have TOEFL, IELTS, or even GMAT. They have online tests that you are able to take, and we do accept those test scores as well. So maybe do check out those online tests as alternative, so you don't have to waste your time waiting for the pandemic to be over.
Yep.
Yeah.
So okay. Yeah, my apologies once again for not being able to answer all the questions that have been posed. It's very overwhelming. We really enjoy the time that we have, and we also like the fact that you are asking a lot of questions. Before we end, maybe Prof. Chu would like to say a few parting words.
Okay, thank you for attending this webinar. All right. Even though the focus was on accounting, I hope you will consider the other masters also. But accounting is an area that's undergoing a lot of change. All right. And at the business school, whichever discipline we are in, we always try to be on the cutting edge. Right. We take into account what's happening in industry because we always liaise very closely with industry. So that keeps our programs contemporary and up to date. All right, thank you very much.
Yeah, thank you so much. Have a good evening, everybody. Yeah,
Thank you.
we will be in touch.
Bye.
Thank you.
Bye.
Bye.